Hey guys, DJ from PTA. Want to go over some trades for July 1st. Haven't been on the desk lately. Been packing and moving. Found me an apartment, so that's always a plus. And just really been away from the market, but I always keep my eye on things and what's moving and so on and so forth. It's a beautiful thing about having a community is that you got other traders you can lean on and other people that's monitoring things for you as well. So one of the trades, I didn't trade this day, but one of the trades I'm going to go over is LYT for July 1st. This was a previous runner. We've seen this stock before, and it was up really because of some news that had came out on it. Didn't get all the logistics of that news, but I know that it was moving on news, and that's why we had some volume out of it. So I want to go over the market overall, the SPY. So July 1st was this day. Ended strong. But again, guys, I'm looking at the overall consensus of what's going on in the market, and we're still in a downtrend. So what I'm thinking, it may come back up to this area and pull back down. It did do a bounce here, so it's starting to show some support here. This could be the first leg of it kind of trying to break trend, or it could be going back up just to suck in more longs and then play that trade. So there's always an opportunity, no matter what side of the trade you're on, to find something that makes sense based on your strategy. But overall, I mean, the market is still in a downtrend. So let's go over that trade LYT. LYT for that day, which was July 1st, we had this big, massive breakdown off of the daily. So your support would have came in somewhere right here. And let me put your candle there. So this is right here where it shows some support. We're just going to call that 690. Probably more like $7, but we're just going to use 690 for now. And then you had a low of 406 here. Okay, so that was pretty much your zones. There wasn't much to really work off of that day. So we had a massive amount of volume on that day of 80 million worth in trades as far as volume goes. And we only got a 36 million float. So the float rotated about 2 times, maybe close a little over 2.3 times that it rotated. And with that being said, this is why this was in play, because of that massive amount of volume. So now let's break this down into the daily chart so that you can kind of understand what was going on in that trade. So let's go down to the hour. So after this massive breakdown on that day, you had a bounce, and then right there, as you can see right there on that hour, let me zoom in, is where the stock got interesting. So this was the initial bounce for your first trade right there. So obviously it bounced, pulled down, showed some sideways price action, didn't break, made higher lows off of the previous low, and you can swing it from there. Now let's break it down to a 5-minute so you can really see the price action. So if you sit here and look at it, you can see that right over this price action here is where probably a lot of traders got in at, right here off the initial break. Now the traders that are, cautious, want to take your time and different things of that sort, they probably more than likely played it here. And the reason for that is this action right here. So as you can see, you have downward trend on the 5-minute. So this is probably more like a 15-minute downtrend. So this 15-minute downtrend right here is what catapulted this move up. So you see the higher lows stepping in. So let's break this down to a 5-minute. And I love the 5-minute because it makes it not too much noise as a 1-minute, but a little bit more information per se than on that. Like I always tell people when I do a trade, I'm always looking at it from a point of view of, okay, where is this trade going to? What is it doing? Well, we bouncing off a major support off of the daily. We hit a low of 401. Then we set in another low, which would be considered another swing low. We wait for the first leg. This could have been a break, depending on how you feel, based on the volume and everything. You have some traders get in here, but some traders will look at the higher time frame and say, hey, listen, I want to see it reach a little bit more. So where would it be reaching to? Well, we really didn't have any price action back here to indicate that, right? We didn't really have anything back here to show a significant breakdown. So this was really the first breakdown. And realistically, when you look at this, this was the first key area that it actually formed A. So this formed A, and then when you look at this, you know, you have some support here, and then it immediately went down, added support here, and then it got kind of went sideways here, popped up, and then officially created the A. So when you're looking at this, this would have been A. Okay, this pullback here and support made it B. And remember, the pattern is A, B, C, and then the flush. So you have to have these two components. That is what this area right here was. So let me go back and explain that one more time a little bit differently for you to see. When you're looking at this trade, you got to look at the areas. First area is identifying the push. So the push came off of the major support, which was 406. We already set double support basically. Once the stock moved, it created A. So this big massive move to the upside, and don't get me wrong, you could have got in here, you could have took a quick pop here or whatever the case may be, but overall, looking at the stock, that would have been your initial play. Now right here, these three candles or four candles makes up a 15-minute breakdown or a pullback. So go to the 15-minute. So this 15-minute pullback created this move here. Remember, this was A. Just looking at it from a smaller time frame. Remember, this is a 5-minute. So this was the pullback. We had our bounce, first sign of support, which would have created B. This is why patience is key. The red-green move, switching the momentum, pull back. And see, I like a stock to close above the break area. So when it closed above the break area, now I'm looking for interest in getting in. So when it closed above the break area on the 5-minute, let's see something here. That was this candle here at 11:40 Eastern Standard. So right here would have been my point of interest. So going back over here, 11:40. It's right here. That 11:40 candle started here. So 1, 2, 3, 4, 5 minutes is that green candle closing above this line, the break area. So I would have got in here, 545, 543 with a risk to here, 535. Remember, guys, when you plan a trade and you got a trade that's more than 30-cent risk, it's probably not a good trade. This literally from here to here is 10 cents. So that's a trade you can take the risk on. Had us quick pop, push back, didn't get back down here, push back, did a sideways price action, file support, and pull up. Another way you can look at this trade is by overlapping it with moving averages. So let's do a exponential. And let's do a 9. I'm going to paint it green and apply it. And then what I'm gonna do is another moving average for you guys. Just the most popular ones that everybody use. Let's see here, exponential. And then we'll make this a 20. And we're gonna paint that one. We'll leave that blue. So as you can see on this 1 minute, it hugged the 9 EMA, broke it, never broke the 20, came back and crossed here, which if you drop this onto a 5 minute, it look even more cleaner, because that's the one thing I love about the 5 minute. So you remember, you would have got in somewhere around here. We said 545, which was about right there. So 545, it just bounced, came back to the moving average, bounced, came back to the moving average. So easily it would have went to 740s. So 740, that's a nice $2 move there. And you stand within line of the moving average. That's why a lot of traders use it. It's because it actually works on the moving average. That's a 10 minute, I'm sorry. Let's go back to the 5. You see, it never hit the 20 EMA. It just pulled it to the 9 and pulled away. Pulled into the 9, pulled away. So when you're looking at a chart, when you're looking at the price action, if you just want to slap a moving average on there and follow along, you pretty much see that it never really closed below the moving average or hit the 20. It just kept going. So when you're looking at this trade, you ultimately got to pay attention to the price, because a lot of traders play off of the moving averages. So when it broke down, hit the 20, pulled back up, and then went back into the moving average and then bounced, I mean, that's a play. That's where you get in at. A lot of traders got in here or added to their position. They pulled back, did a heavy pullback, suck in more shorts. Look at how the volume increased here on the green. And then you had sequential red candle, volume increase over this previous green, almost as if it exhausts. Shorts took over, and then they took back a vengeance right here on this candle, right into the moving average. This is the moving average right there. So when you can see those type of trades, this is why you have to be patient and let the trade manifest. You can see the pull, bounce, went sideways into the moving average, more buyers stepped in, bounce. So when you're looking at this, this is how you got to kind of view these trades. Look at how they are, your positioning, your entry, so on and so forth. That was just a phenomenal trade all the way around. So go over it again. You want to look at the key areas. Well, what was the key area? Where we bouncing off of support, bounce, had us an exhaustion here, moving into a moving average. Then we had another bounce, back down. Now this is where it got critical at for people that understand how this moved. It closed. See, none of this closed above the line. It closed here. That's when it sparked my interest. So, okay, you enclosed above the moving average. Now, it might have closed and continue to flush back down. Cool. But when it closed and I see you hugging a 5 minute EMA, 9 EMA, and you're stepping up, you setting in higher lows into, what was this, high a day right here? That means that everybody from this point down is getting squeezed. So that squeeze caused this. You got late traders getting in, more late traders getting in or adding to their position, and that was the move. This is the heart of the move. You would already been there right here at the bottom. So it's just identifying your areas, figuring out what makes sense for you, and then getting a trade and seeing how it plays out for you. So LYT, good job, Trade King, on that one. That was a phenomenal trade. If you are a member in our company, you will receive, or you would have gotten an email on this trade first thing that morning. So a lot of times traders, if they're not in a Discord, whatever, they're already looking or already know, because that's what we give our subscribers that are paid subscribers in the process. We give you that information a tad bit earlier than everyone else. Now, those who are on Discord, you can definitely follow along, but to get that insider information, you got to become a member. And knowing that helps you get into the trade a lot sooner, a lot earlier than you expect. That was the initial move. So now you're there when it's actually moving. So guys, if you have any questions, comments, leave them in the comment section. Hit that like button so that other traders can review this video as well. It gets thrown in that algorithm that YouTube has, as well as hit the subscription button and hit that bell so you don't miss none of these video lessons. And as I tell all new traders and old, no matter where you started in your trading career, stay studying and stay focused.